What's up, ladies and gentlemen from all over the world? Hope you're doing great. It's me, Matt Corvo, 26 years old from Montreal, Canada. We are now Tuesday, December 9th, 2025. And as always, I just wanted to do a screen recording going over today's price action on the S&P 500 E-mini futures. I trade order flow. I trade with the footprint charts on ATAS. I trade with Bookmap, and I trade with a volume profile. All right, so today I had a little bit of a better day trading. I don't want to say better, but I'm somehow finding a little bit more hope in my trading. Yesterday I was super discouraged, super frustrated, but today it's just going slightly better. So now there's a little bit more hope in my trading because I've started drawing some support and resistance zones on my charts. Those are not necessarily volume profile levels or anything. They're just points in the market where I see many touches either to the upside or to the downside. Interestingly enough, when I draw them before the beginning of the session, during the session itself, obviously, price tends to touch them a lot. And those can simply act as interesting AOIs, areas of interest, or levels of interest for my trading, for catching potential break and retest trades or reversal trades. So if you just look at, for example, this one, you had, let's just start with this one for an example, one touch, two touches, maybe another touch here. Let's make it slightly bigger. Another touch here, another touch, boom. Okay, and then the session starts. So if you look at this whole zone, it got touched one time, two times, and you could argue maybe even a third time. Now, if you look at this whole area, there was a whole chop here, one touch, another touch, another touch. And then during the whole cash open, price had a hard time punching through. Price was really playing between my two levels. And here, there was a buy from here, and then a sell and a sell. If you look at this one touch, two touches, three touches, four touches. Where did price react? This one. And then if you look at this level here, it was somehow the zone, one touch, another touch. And then again, this is where price reacted again. So right now, at the beginning of each session, I'm going to start marking my support and resistance zones. And there are basically three things that can happen when price reaches them. Number one, you have a reversal. Price sweeps either those highs or those lows. Price either sweeps or touches that whole zone. It can sweep the high and then it can give a reversal. So basically in this case, you would want to see on the footprint trapped buyers and aggressive sellers showing up. So that is the number one option that can happen, a reversal. And number two, what you can have is a break and retest. A break and retest very simply is price pierces through your level, but then comes back, revisit that level, and continues further. It is a continuation. Sometimes it happens super fast and it happens in a few seconds, in a few minutes, but sometimes you really have a nice chop here and you have plenty of time to enter. And that happens sometimes. As you can see here, it broke and it retested again to come back. And as you can see here, it broke and then it retested. Here, that level got broken through and then retested. So that is your second option. And then third option is just chop. It starts chopping and it will do either one or two things: break and retest or a reversal. But chops, you can get stuck into them, you can get tricked, and they are the most unfortunate. Now, how do you know when price reaches your support and resistance level? How do you know if it's going to give a reversal or if it's going to give a break and retest? What is it going to do? You don't know by just looking at a normal candlestick. So that's when you jump on an order flow software like ATAS I have here, which shows you the cluster's footprint charts. Now here you can see the aggressive market participants. If you look here on ATAS, I just marked the same exact levels as I had marked here. They're the same levels. And just quick thing, I use a volume profile obviously, but I realized a lot of the time the value area high, the value area low, they will line up with your support and resistance zone that you can see with your own eyes. If you look here, the value area low is that whole zone, that value area high is that zone, and the POC, the point of control, is that whole zone. No matter how you drag it, the volume profile is affected by where there are highs and lows in your price action. So you need it, of course you need it. But again, even when it comes to the volume profile, those lines here, the 70% of the value area, they're zones again. They're not a support and resistance super clear line. So let's come here, and basically today I just wanted to study, starting from 930, what happens at those support and resistance zones that are marked on my chart. And basically just looking, for example, here, when you have a reversal to the downside, what you want to see are trap buyers and aggressive sellers showing up. When price came here, what you wanted to see are trapped sellers and aggressive buyers showing up. And you want to see a lack of follow through from the sellers and the buyers really showing up. Same thing here, same thing here. Okay, here trap buyers, aggressive sellers, here trap sellers, aggressive buyers, etc., etc. So I just want to study what's on the prints. Now you're going to ask me, Matt, what the hell are those candles? What the hell is that? They're really not that complicated. Each one you have two columns. The first column is the deltas at each price level. Here at 56 and now 56.25. 56.50, etc. And the delta is basically aggressive buying minus aggressive selling. So you can see in this candle, the sellers were really strong and then more buyers on top. So you could argue maybe that those sellers were trapped. And when you have big outliers in the deltas, you want to see, are sellers able to hold price below them? And now the second column is the volume distribution of each candle. It can give you a valuable, relevant information whether we have a P-shape volume or a B-shape volume. Like perhaps this one. It does more of a B-shape, more towards the bottom of the candle. Now, this is what I said, when it chops, it's very confusing. You have so much information. So what you can do is that instead of using a time frame footprint chart, you can use a range bar. So I like to use the 24. Let's just make it load, and it reduces a lot of the noise. Each candle you see is 24 ticks. So it reduces the noise a lot and makes your chart cleaner. You have less information to analyze. So let's just study what happened here at around 940 to see if we could have caught a sell here. So 940 was here, if you could have caught a break and retest. So let's have a look here. Okay, so you have a support and resistance zone. If you want to sell, what you want to see are trap buyers and aggressive sellers. If you want to see a break and retest, you want to see strong buyers able to hold price above them. And you want to see the sellers to be trapped. So let's look at that one. This candle is super, super positive. You do not want to sell seeing that. And now you have this one. Okay, it might be your sign to start selling that, maybe for a reversal, because you see the aggressive sellers are very strong and you have a lot of volume above. But then what happens is that right after, you have no follow through from the sellers. The sellers are unable to hold price below them. They're unable to hold price below them. They try again here. You see a big order that comes in. This is from my indicator here called big trades. They're unable to hold price below them. They even create a strong imbalance which gets filled, and then they get stuck here, and you then see the aggressive buyers showing up again. So maybe you could have entered for a short buy targeting that other zone here, targeting that high. Now, where would you have gotten? This would have been a super tiny trade. It would have been a scalp. Okay, so then we now reach this level. This high gets run. So this point in the market is here. Okay, so what do we see here? What do we see? For you to sell from this level, you want to see trap buyers and aggressive sellers. So this is exactly what you see. You see trap buyers here, they're completely stuck. They have no follow through, 1K orders, and the sellers are really showing up under. The sellers are showing up under. Could have caught a sell targeting what? The next zone, boom, ping pong. Now price reaches your zone here. For you to buy what you want to see, you want to see trap sellers and aggressive buyers. Trap sellers and aggressive buyers. And you can also look at those numbers. I like looking at those numbers. I do find them extremely relevant. I like to compare the final delta to either the minimum delta or the maximum delta. If you look at this candle, super negative candle, what do you have? 1K and 1K, they're the same numbers, super negative. But then you look at this candle, zero follow through. The final number is positive, and it went all the way from minus 778 to 155. And the 155 is a lot more similar to the max delta number. Very well. So here you see trap sellers and aggressive buyers showing up. So this could have been a buy. And here, if you want to sell, you want to see trap buyers and aggressive sellers. So let me ask you, do you see them on this candle? No, it's all blue, all positive numbers. No sellers here. So you're not selling yet. Same thing here. What do you want to see? Trap buyers and aggressive sellers showing up. Do you see them? No, not happening. The buyers are not trapped, they're still strong. And here, it's a little bit of a different story. It's starting to change. You see the numbers are becoming very, very, very negative. They're becoming very negative. The buyers here are trapped, very negative numbers. And next candle, the numbers are clearly changing. The numbers are changing. Here you see they're super positive, but here they're very negative. Minus 2K, minus 2K. And here you see aggressive sellers. Boom, big order. Okay, you might be considering a sell. Trap buyers. And then the buyers showing up again and again. So maybe this could have been an entry. This whole level here could have been an entry in the 70s. You see here the buyers are completely stuck. Big numbers, 329, etc. And they get completely stuck and price just sells after. They're unable to hold price below them. And it's interesting, price revisits that same level. That same level is where the buyers come again. So basically every time price reaches your support and resistance zones, you look. So here you do not see trap sellers and aggressive buyers showing up for you to close your sell, so you hold. Next zone, price comes here, and then strong buyers. Okay, this is scary. This is scary. It comes to the other zone, and then reversal, etc., etc. So this was a big chop here, very choppy. This was super choppy here. If you look at this chop start, it went from 1005 to 1047. So here I just have 5 candles. But if you go on the 1 minute chart, it was this whole thing. So this is why I like to use a tick chart. And now same thing here. Would I like to be buying this thing when I see trap buyers? What I would like to see are trap sellers and aggressive buyers, but that's not what I'm seeing. That's not what I'm seeing at all. I'm seeing quite the opposite. Seeing trap buyers and aggressive sellers. Now the question is now for myself, when the candle is developing itself, what do I do? All right, guys, so I believe that's going to be enough for today. I think that's how I'm going to be trading moving on forward. Of course, I also look at Bookmap for potential targets when I see large bids or large offers. All right, guys, so that's going to be all. So this was the S&P 500 E-mini futures. And yeah, there's hope in my trading. I just need to persevere and hang in there.